Hello guys, welcome back to Rally Tap Investing. Here we trade the markets using the order blocks, market structure and institutional order flow. We like to keep things simple here. The forex market is hard enough, so guys, please don't make it any harder. With that being said, if you are new here, please hit the notification bell icon and hit the subscribe button just immediately so that you don't miss any of our videos when we publish it. All right? And if you enjoy the content we have been giving to you free, please hit the like button, drop a comment, and share with your friends and families. All right, let's go straight into our discussion today. In today's episode, guys, I want to show to you a powerful scalping strategy that can grow your account by 10% every single day. A scalping strategy that can grow your account by 10% every single day. But you need to follow the instructions I'm about to share with you here in this video. You need to follow the instructions strictly if you must see a huge result in using this strategy. Now, the first thing I want to show to you is the pattern you need to train your eyes to see in the market. The pattern is known as accumulation, manipulation, and distribution. ICT calls it the power of 3. Now, I'm going to show you in a diagram, assuming you are expecting a bullish day. Now, this is what you want to see in terms of accumulation, manipulation, and distribution. Now, this is your consolidation zone, all right? This is accumulation. Now, you want to see a manipulation to the downside and then a distribution. Remember, if you're expecting a bullish day, the opposite is for a bearish day. All right? If you're expecting a bullish day, you expect to see manipulation, then you will expect to see accumulation, and then this manipulation and distribution. That's what you want to see. Train your eyes to see this pattern that I'm showing to you now. All right? How do you find this pattern? Well, you will find this pattern when you use the Asian range. When you use the Asian session and the London session. These are the two market sessions you need. Asian session and the London session. These are the two market sessions that you need to trade this strategy successfully. All right? Now, as you may have known, the market is divided into 3 principal sessions: the Asian session, London, and the New York session. Right? Now, during the Asian session starts with the Sydney session. The Sydney starts by 10 p.m. to 12 a.m. UK time. Every time zone when I'm mentioning any time zone in this video, I'm referring to UK time zone. So you do the conversion yourself, depending on your location. All right? So Asian session starts with Sydney, and Sydney starts from 10 p.m. to 12 a.m. And Asian proper starts from 12 a.m. to 6 a.m. Please take note of this. UK time. All right? And as you may have known, the Asian session is typical of consolidation market. It is characterized by consolidation market, which is known as accumulation. That's what you want to see. You want to see that accumulation during Asia. And then when London opens, you want to see a manipulation. Like I told you in that diagram, if you're expecting a bullish day, you want to see a manipulation to the downside. Let me show you again once more. If you're expecting a bullish day, this is the Asian session. Price is coming up here, and it got to this Asian session and accumulate. Now, during London session, you want to see manipulation to the downside and then distribution. All right? Opposite, if you are expecting a bearish day, the opposite is the case. It's just the exact opposite. All right? This is the pattern you need to train your eyes to see. Accumulation during Asian session, manipulation during London session. Now, let me tell you this. You have 3 hours window during London. You have 3 hours window during London to trade. Your trading window for this strategy is 3 hours during London. If after 3 hours you don't find this pattern I have shown to you on this or in this video, then close your laptop and go do some other things. All right? Now, very simple strategy. All you need to do is to wait for Asian accumulation. Then, once you mark out the high of your Asia, the low of your Asian range, all right? You mark out the high of your Asian range and the low of your Asian range. Now, you wait for price to break either the high or the low. The candle that breaks the high or the low, you wait for a candle to break the high of the or the low of the Asian session, and then you scale down to lower time frame using 5 minutes or 1 minute. Now, depending on your personality, if the 1 minute time frame is too fast for you, then stick to the 5 minutes time frame. Once you see this pattern on your 1 hour time frame, you are using your 1 hour. 1 hour is the best to identify the pattern I've just shown to you. Now, once you identify that pattern on your 1 hour, you go to your 5 minutes or the M1 for your entry. 1 hour, H1 is for your pattern. M5 or M1 is for your entry. Now, but the first thing you need to do is to find out your directional bias. Is it going to be a bullish day? Is it going to be a bearish day? You can find that one out using the daily time frame. Very simple. Use the daily time frame. Look at the structure of the market on the daily time frame. Is it giving you higher highs and higher lows? Or is it giving you lower lows and lower highs? Identify your bias using the daily time frame. That's all you need the daily time frame for. After that, you just go to 1 hour and mark out your Asian high and your Asian low using the time zone I have told you earlier. All right? Once that you conclude that, you wait for London to open. What are you waiting for? You are waiting for a candle body close, either below or above your Asian range. All right? Once the candle breaks below, if it was a bullish day, a candle breaks and closes below your Asian low, you drop down to either the M5 or the M1 for your entry. And what are you looking for? On your M5 or M1, you are looking for our entry model. You know that, our entry model. That's what you are looking for. A double break of structure. All right? I won't go into that because we've been saying that, we've been talking about that in our previous videos. All right? So that is all that you need. And then the final thing that you need to trade this strategy successfully is that this strategy works best. And I will advise you to use it only on Euro and Pound pairs. Only on Euro and Pound pairs. Like Euro USD, Euro GBP, GBP USD, GBP JPY, and all that. Right? Use it on Euro and Pound pairs. All right. Now let's get into the chart. Let me show you some examples. Now, take a look at this. This is pound dollar. As you can see, it's 1 hour time frame. I told you What you need is your 1 hour and M5 or M1 for your entry. 1 hour for your pattern. Now, this is the Asian range. This light blue box is the Asian range. All right? Now, let's start from the daily and look at the bias of the market. As you can see, from the daily time frame, we are bearish. Can you see that? That's all you need the daily time frame for, to determine that you are bearish. You can see market is printing lower lows and lower highs. All right? So we are bearish. Now, you go to your 1 hour time frame. Now, this is your Asian range. This light blue box, as I said, is the Asian range. All right? Now, you mark it out the way I boxed it now. You can box it like this. Since we are expecting we are expecting a bullish day. I'm sorry about that. We are expecting a bullish day. All right? We are expecting a bullish day. I'm sorry about that, guys. I'm really sorry about that. We are expecting a bullish day. We are expecting a bullish day. All right? Sorry. Just a moment. We are expecting a bullish day. Now, I said your trading window is 3 hours during the London session, all right? And 3 hours during the New York session. I didn't mention that. 3 hours during Asian session and 3 hours during 3 hours during London session and 3 hours during New York session. These are the only trading window that you have. If you don't find this pattern within these two trading windows, close your laptop and go do some other things. All right? So we are expecting a bullish day. As you can see on the 1 hour, price has been making higher highs and higher lows. And if you go to the daily, you can see that price has broken this high. Take a look. I want you to look at this high. Take a look at look at it. Price has broken this high here, these two highs. Can you see these two highs? Price has broken it to the upside. What is resting above these two highs? Liquidity. Price broke it to the upside. Can you see that? And then broke this structure again here too, to the upside. Can you see that? So we are expecting a bullish day. All right? So we go to the 1 hour now. We go to the 1 hour. So you mark out your Asian session box. All right? And then wait for price to break. Because we are expecting a bullish day, so price will break downward. And here is your break. Let me zoom in for you to see. Here is your break. All right? Let's use a vertical line here. This is your break. This is the candle that has broken. This is the candle where the red vertical line is that broke this Asian low to the downside. All right? So once that happens, what do you do next? You scale down to either the 5 minutes or 1 minute. Let's go to the 5 minutes and see first what is happening. What do you want to see on the 5 minutes? You want to see our entry model. All right? Now, as you can see, on the 5 minutes, let's go to the 1 minute so that it can be clearer. If you drop to the 5 minutes and you don't find any opportunity, entry opportunity, drop to the 1 minute. All right? So this is 1 minute. Now, this is the 1 hour. Look at it. I told you price can drop into a structure point like this. But whether you have a structure point like this or not, it does not really matter. Once price breaks Asian low, what you want to look for is to scale down to lower time frame and wait for our entry model. All right? Now, let's go back to that 1 minute. Let's go back to the 1 minute. Now, price, remember, this is where a candle broke the Asian range low, right? Okay, so we start looking for buy opportunities here. Now, as you can see, this is the last lower high. Price broke it to the upside, right? Now, it pulled back and went up again to break this structure again. All right? That confirms to us that price is about to rally, isn't it? Now, what you need to look for is your OB to take trade from. Now, there was no opportunity for an OB to react here because this tiny OB here, price didn't get to it. This price that came back didn't get to it. Now, but we found another opportunity here. Can you see this small candles? This brown box. Can you see? This is your OB here. Price has broken structure here again, and here is your OB. Can you find your OB? And look at how price rallied. Can you see that guy? How price rallied. Just look at it. How price rallied. Can you see that, guys? Very simple and straightforward strategy. Simple and straightforward strategy. So that is the first example I want to show to you. Now, one more thing. When you are trading this strategy, if you are a beginner, shoot for 1 to 5 RR. 1 to 5 if you are a beginner. But when you have gained experience, shoot for 1 to 10 and above. All right? Shoot for 1 to 10 and above. It is a powerful strategy. It's a powerful strategy. Now, let's go to another example and see what's going on. And see how we use now Euro GBP. Now, let's start from here. You can see, you go to the daily time frame to find your directional bias, isn't it? Now, what is the directional bias? On the daily time frame, you can see price is pretty much bearish, isn't it? That's all you need. That's all you need on your daily time frame. And then you go to your 1 hour where you find your pattern. All right? Because we are expecting a bearish day. This is your Asian range. This light blue box here is your Asian range. Now, this is the candle. This is, let me show you the candle that has broken. Let's use a vertical line again. Now, this is the candle. Sorry, guys. This is the candle. No, this is the candle, not that one. This one is the candle. This is the candle that has broken this Asian high. This candle here. That's the candle that has broken this Asian high. Now, let's drop to 5 minutes and let's see. Let's see on 5 minutes. Now, this is that our vertical line, isn't it? Now, you really need to know how to read your structure using this strategy. You need to know how to read your structure. Now, this is where the Asian high was broken to the upside, isn't it? Now, it formed this higher low here and higher high, and price came down, right? Broke structure. This price came down here, broke these lows here. Can you see that? Creating lower low and move back up and drop again to break this structure the second time. All right? Here is our OB. Can you see? Here is our OB. All right? On the 5 minutes. and look at the precision. Price went into that our OB on the 5 minutes and it melted. Can you see? It melted. Can you see? Shoot for 1 to 5 as a beginner. When you have gained experience, you shoot for 1 to 10. RR. Right? Okay. So let's continue. Here is the next one, the next example. All right? We have already determined that the bias is bearish. So this is the candle. You are expecting a candle to break above the high of the Asian range in this case. All right? So that's the candle that broke the Asian range. Now let's drop down. This time, drop down to maybe 1 minute and let's see. I don't know whether my chart will get to that. Okay. This is the candle, the vertical line that broke the Asian high. All right? And so you start reading structure. This is higher low, higher high, higher low, higher high. All right? Now, price has broken this structure to the downside, and price started accumulating here. All right? And then eventually, price came down and broke all these structures here. Right? Now, but there were intraday breaks of structure that happened in between. Here, price came down, broke this structure. This is an intraday structure. It broke that structure and dropped, and then pulled back again and broke the structure the second time. Here is your OB. Can you see that? Here is your OB, and look at how market dropped. Look at how it dropped. All right? Look at how it dropped. Like I said, as a beginner, you shoot for 1 to 5 first. When you gain experience, you shoot for 1 to 10. As you can see, this could have given us more than 1 to 10 if you were to trail your stops and continue riding the trend. All right? So, just a quick recap. The first thing you need to train your eyes to see is the pattern I've shown to you. The second rule is this: check for your directional bias using the daily time frame. Very simple. Number 3 is go to your 1 hour time frame and mark out your Asian range. I've told you the time period for Asian range. Mark out your Asian range, the high and the low of your Asian range. Wait on your 1 hour for London to open and look for the candle that will break either the Asian low or the Asian high, depending on your bias. All right? Once you find that candle that violates or breaches your Asian high or low, drop down to M5 or M1 and look for your entry opportunities using our entry model. As simple as that, guys. All right, guys. But one more thing. If you are new here, please consider subscribing right away and hit the notification bell icon so that you don't miss any of our videos when we publish. All right? And if you enjoyed this content, please hit the like button. Drop a comment. Just say something. It could be just nice. It could be good. Just drop a comment to encourage us. All right? It takes a lot to make a video like this. Please drop a comment and share this channel with your friends and families. All right? Please encourage us. All right, guys. I see you in our next educational video.